Bring in show music, please.
Hi, I'm CNBC producer Katie Kramer. Today on Squawk Pod.
Intel.
It's official. The U.S. owns 10% of Intel after the chipmaker's CEO went to Washington for an Oval Office chat.
You want to trade your job for 10% of equity? Go with God.
Our Andrew Ross Sorkin is joined today by Leslie Picker and Wilfred Frost.
I'm sorry, America's not as much of a free market as it used to be.
White House economic advisor Kevin Hassett tells us more deals may come.
I'm sure that at some point there'll be more transactions, if not in this industry, in other industries.
And the U.S. Open is underway in New York City. Venture capitalist and sports entrepreneur Mark Ein joins us on set to discuss the big changes on center court.
It always had this image of sort of an older, not very diverse audience, and that's totally changing. And then the sport itself, these athletes are like global superstars.
Plus, Fed Chair Jay Powell opens the door to an interest rate cut in his Jackson Hole speech.
The baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
Is this a pivot?
Kind of felt weak. To me, it felt weak for taking a stand. He's just caved.
It's Monday, August 25th. Squawk Pod begins right now.
Stand Andrew by. 3, 2, 1. Up and Andrew. Cue.
Good morning. Welcome to Squawk Box right here on CNBC. We're live at the NASDAQ market site in Times Square, and I've got two very special people I'm hanging out with this morning. I'm Andrew Ross Sorkin, along with Leslie Picker and Wilfred Frost in from London. Very nice to see you both.
Treat to be here.
It is a treat to have you all week. Joe and Becky are off on this final week of August, but we are not off. There's a lot going on.
By the way, Leslie, I don't know if you heard him intro this. Do you think Andrew's aware he's stuck with us all week?
Yeah.
No, he just referenced it this morning.
No, all week. All week. We're doing this all week.
It's not a, we'll see how you do on Monday, and then we'll see if you come back. Will flew in from London, so he's locked in for sure.
He's locked in.
He's locked in.
Leslie can bail at any time.
Yeah.
My 2 alarm clocks worked this morning.
I woke up before them because I'm still on British time. I'm taken back to the WEX days where, you could have a weekend back at home in London, fly back in and just slot back into the time zone. Anyway, breakfast is my new gig anyway.
I know, it's a breakfast, but for two or three mornings, I think you're going to feel fine, and then it'll slowly.
Yeah, but I've been doing these shifts before. It's not.
But you were a younger man before.
It's shift.
No, but I've been doing it since February. In the UK.
Oh, right.
It's just, we talk about different stuff.
Right. Can we get you a Peet's coffee this morning, if you know where I'm going?
Right?
Oh, I think I do know where you're going, but I'll take any coffee.
Okay, we'll work on it.
I don't really, at this
caffeine.
time, you don't really care about the brand. By the way, we might also talk about a British coffee brand as well, about Costa this morning.
Well, there's a lot of coffee news and a lot of merger news on an M&A Monday in August. Keurig Dr Pepper is buying Dutch coffee company JDE Peet for more than $18 billion in cash. Keurig says the merged company plans to separate its coffee and other beverage units as soon as practicable. Practical, I'm assuming.
Practicable is a word.
It is a word, but I've always thought, since I started this job, why not go with practical?
I know. I was like, maybe I need more coffee.
Well, we definitely.
Practicable. The two companies will be listed in the United States and led by Keurig's current CFO and CEO, respectively. According to a press release from Keurig, the deal is expected to create the world's largest pure-play coffee company and result in about $400 million worth of cost synergies over 3 years. Keurig Dr Pepper was created in 2018 through the merger of Keurig Green Mountain and Dr Pepper Snapple. I feel like that was just yesterday. Shares are up roughly 9% this year. Before this morning's news, JDE Peet's shares were up about 60% in 2025. This is the whole coffee merger element, and what's going on in beverages is so interesting right now, especially as it pertains to the tariff element, the drought. It's just created all these challenges.
I'm not an expert in this, but my read on it this morning, tell me if I'm wrong, the soda business sounded actually like a good business, and the coffee business was the struggling business, or is it
That's how I read it, too.
Okay, I just want to make sure I have not lost my mind here, because I originally thought coffee, premium, that's like a great business.
Right.
It sounded to me like the multiples on the other business.
It's interesting to see how the European press versus US press lead the headline on this. The headline here is they're splitting back up again.
Right.
Obviously in Europe, they're buying a big business that owns Kenco and Dairy Egberts. It's a decent size acquisition taking place as part of it. But Yeah, I know it was 2018. It's a long time ago. So it's not like you're criticizing the merger in the first place, the tie-up in the first place, like soon afterwards. But it's basically acknowledgement that that didn't really work for them.
Well, and some of the parts of coffee relative to soft drinks and soda is blackberry Dr Pepper apparently is a big winner on the soda side.
Did you know that? Do you drink this stuff?
No. Not Dr Pepper. I mean, Peet's is an interesting one because it's got like one high-end brand and then quite a few more low-end brands like Kenko and Dairy Egberts. But anyway.
And JAB was the entity that's involved in kind of both. It was the one that obviously is a majority owner of, I believe it was Peet's, and then has like a 5% stake or 4% stake.
Something like that.
Yeah.
Let's talk you through now what's ahead this trading week. Last week of August, but there's still a lot on. The action will really pick up later on in the week. Friday, we get the big economic reading of the week, July PCE inflation. It's the Fed's preferred measure, of course. Could play into a big role in helping determine whether central banks will cut rates next month. I have to say, fascinating about that. What do we have? What happens if we now get a couple of hot inflation reads? Does Powell have to backtrack again? I was seriously surprised that he pivoted last week. After taking a stand, it was not even the right place necessarily. You weren't expecting him to pivot.
I was not
like
expecting it.
It's not the right venue to pivot.
Our policy rate is now 100 basis points closer to neutral than it was a year ago. And the stability of the unemployment rate and other labor market measures allows us to proceed carefully as we consider changes to our policy stance. Nonetheless, with policy in restrictive territory, the baseline outlook and the shifting balance of risks may warrant adjusting our policy stance.
It kind of felt weak. To me, it felt weak for taking a stand. He's just caved.
Well, I felt like his whole MO the last few Jackson Holes has been to preserve optionality. And given the current environment, that's been the MO. But obviously, against the backdrop with political pressure, a lot of uncertainty out there, I was also surprised that he
What does
was
he do
so
if PCE follows PPI and it's super hot? What does he do then? We'll see.
Well, then he might start to look at jobs and say he can go that direction. I've always had a view, it's somewhat conspiratorial, and he would not like this view. This is the last decision that he's going to make before President Trump selects, likely, whoever the next Fed chair is going to be, right? All these interviews are going to happen. Scott Bessent's going to do them in September. If he had been, quote unquote, defiant and decided that he wasn't going to lower interest rates, I think the president would be more likely. You can take what I'm about to say with a grain of salt, by the way. I would have thought that the president, if he, in sort of the face of what the president would have seen as defiance, he would have been more likely to appoint an absolutionist, absolutely loyal individual who he knew would be like a full-on dove. And that by potentially saying, okay, I'm going to lower interest rates now, maybe it gives everybody a little bit of breathing room to find somebody or to pick somebody who might feel, hopefully, a little more independent. I do not know. You may think that's completely crazy talk.
I buy that entirely, but that's a bit weak.
Well, that might be weak too, but I'm just suggesting.
Yeah.
It's interesting, though, because we heard from a lot of other Fed governors who are out there as well. And, obviously, in order to lower interest rates, they like to have as much consensus as possible. The last meeting, was somewhat historic on that front. But, there was a lot of attention paid to the dual mandate and the idea that inflation, it still has a lot of uncertainty around it. And what happens if, some of these delayed tariff elements kind of filter their way into these readings and seem to be a little bit more hawkish, just kind of writ large, except for the ones that we'd already known to be more on the dovish side. So, I think the markets still say 80% chance of a cut in September.
Yeah.
So they took the pivot for what it was. The market reacted to it. But in terms of just the overall likelihood in the pricing in the bond market.
The thing you have to conclude from all of this is stickier, longer term inflation. Not the 10% we saw a couple of years ago, but the above, target for sure. Just as a snapshot as well, in the UK, we cut rates most recently, and then the inflation print a week later came in at 3.8, where it's hotter and stickier. And people are still expecting another Bank of England cut in the next meeting, or if not the next one, the one after that. So either way, central banks, one way or another, are kind of finding the way to try and, cut even despite the inflation, but they're not as focused on it as they used to be,
Yeah.
And they felt it was, kind of hike as aggressive as possible. So I just thought it was interesting. But let's see, PCE, what day did I say PCE was?
Friday.
This is the story of the morning. Intel. We're watching shares particularly closely right now. 25%, or I should say, sitting at 25, up about 3%. This follows, of course, the news that the Trump administration taking a 10% stake in the U.S. chipmaker. In a post on Truth Social, President Trump saying, "I negotiated this deal with Lip-Bu-Tan, the highly respected chief executive officer of the company. The United States paid nothing for these shares, and the shares are now valued at approximately $11 billion. It's not exactly how it happened, but we'll explain. Trump called the transaction a great deal for America and for Intel. It's going to be funded. He said there was no cash involved. It's going to be funded with about $6 billion in previously awarded grants to Intel under the 2022 CHIPS Act, plus about $3 billion from another formerly classified government program. Joint release from Intel and the White House saying the U.S. will not seek direct representation on Intel's board. It also pledged to vote with the current board on matters requiring shareholder approval with limited exceptions. I would love to know what those exceptions are. This is one topic we're going to get into a lot this morning with White House NEC Director Kevin Hassett. We've done this before, but typically only in the context of companies that were seriously on the ropes. And at the time, I'm talking about GM. You could look at the banks. That kind of thing. And maybe you could say Intel is on the ropes, maybe, but I don't think this was that circumstance, at least in this context. And the question I have longer term is whether we're going to see a lot more of this. Apparently, after they did this, they attempted to do this to Taiwan Semiconductor, and Taiwan Semiconductor said, "We don't want the money. We don't need the money." Well, that's the bigger question.
This comes back to why, the stock's obviously up. It comes at a time for Intel where obviously it's not like it's a richly valued stock like some of its rivals. So that's part and parcel of why it might rise on this. But I think it comes down to what does it imply the administration is going to keep doing in terms of policy going forward. And that might be why, as a side note, TSMC is like, well, the policy is going to benefit the domestic players. I think that's the sort of shorter term, maybe even medium term constructive argument for Intel is, does this suggest everything in all policy coming forward is going to be there to support domestic players like this, and therefore we need to have a bit of that upside. The longer term, don't need to say this on this channel in this city, but state ownership is it doesn't usually work out long term.
Not the best track record.
No.
But at the same time,
coming from Europe, I'm well aware of that.
From Lip-Bu-Tan's standpoint, I mean, he walked into that meeting.
He was about to lose his job.
He was about to lose his job. So,
yes, but sure, if you want to trade your job for 10% of equity, go with God, I guess.
Right.
But that's the bigger question. What do the shareholders think? But they seem to like it in the short term.
Well, because they know that the practical alternative is worse, because what you would have likely had is the president would have said, you know what, you guys are all screwed up. We don't like your CEO. We think he's involved with the Chinese or whatever he wants to say about it. And he would have somehow, A, tried to find a way to push him out. B, they would have said, you know what, you guys are so screwed up. We can't give you these grants. You clearly can't meet any of the deadlines and any of the other commitments that you made before. So you're not getting this money anymore. By the way, then you would have had a true sunk cost problem, because Intel has invested heavily in trying to make this work, but actually needs the money on the other end to make it work. So, by the way, as a taxpayer, on a very short-term basis, sure, if we can get the benefit of this, great. However, the long-term effects, as you rightly said to me, are so troubling that I'm surprised people are not, putting their hair on fire about this.
I think one of the reasons why the stock has been up is there's this expectation that the administration can coax certain potential customers
when they call up Tim Cook and say,
you're
going to have to buy some of these chips.
Right.
So
Tim Cook, despite how many golden-plated trophies he gives Trump, will probably say yes.
There was a nice trophy there.
It was a very nice trade. And gold prices are very expensive.
Special glass as well.
Yeah.
The only final thing I say this, I'm not sure I should say this 14 minutes into my week here, but is quite an important point, which is Trump and America generally always says we're the free marketplace. You in Europe have got to take this tax away, and you in some other country have to remove these non-tariff barriers. How are we meant to compete? I'm sorry, America's not as much of a free market as it used to be. Under the Biden administration as well, extraordinary state subsidies is a different way of doing it.
Yeah.
You know, the battery communities in Europe, if you blocked from doing this type, and there's huge subsidies for wind farms, and then in a different way here. It's very difficult, and I know what the response is. Crimea River, we're able to do it, fair point, but it's just it's a different ballgame now.
Cheese will be next.
Coming up next on Squawk Pod, the government's deal for a 10% stake in Intel. Kevin Hassett, the director of the National Economic Council.
In the past, the federal government has been giving money away lickety-split to companies, and the taxpayers have received nothing in return.
So this arrangement, it may only be the beginning. Welcome back to Squawk Pod from CNBC. A headline in the New York Times this weekend described America's newest activist investor, President Donald Trump. The president did confirm late Friday afternoon that chipmaker Intel has allowed the U.S. government to take an ownership stake in the company, about 10%.
And I said, I think you should pay us 10% of your company. And they said, yes, that's about $10 billion. I don't get it. This comes to the United States of America. And I said, I think it would be good having the United States as your partner. He agreed. And they've agreed to do it. And I think it's a great deal for them. And I think it's a great deal. He walked in wanting to keep his job, and he ended up giving us $10 billion for the United States. So we picked up $10 billion.
We got into this shift to a more state-sponsored capitalism with Kevin Hassett, the White House advisor who heads the National Economic Council. And he hinted, well, more than hinted, that, yeah, this just might be the new normal.
Joining us right now, talk about that and so much more. We're going to talk about Jay Powell and everything else. White House National Economic Council Director Kevin Hassett. Kevin, it is great to see you this morning. Thanks for coming on.
Yeah, it's great to be here.
So here's the question. Ronald Reagan famously said the 9 most terrifying words in the English language are, I'm from the government and I'm here to help. Right? You remember that line, and it's a line that I think it's been used by Republicans for the last several decades, until maybe Friday. Can you explain the rationale behind taking this 10% stake?
Right. Well, it's not really a taking, right? The bottom line is that because of the CHIPS Act, the U.S. government had decided to give a whole bunch of money to Intel. And the President Trump and Howard Lutnick, Secretary Lutnick, talked to Intel about the progress they were making in the hurdles that they had to hop over in order to get the money. And I don't think they're particularly happy with that progress. And so in the end, they worked out a deal where Intel is going to get the CHIPS money, but in exchange, we're going to get some equity. And equity is not voting, so there's not going to be government intrusion into the business of Intel. It's more like a down payment on a sovereign wealth fund, which many, many countries have.
Kevin, though, is this the beginning of a larger effort by the U.S. government to take equity stakes in other industries that we subsidize or other companies in the AI and chip space that we subsidize? So a good example is AMD. Another example might be Taiwan Semiconductor.
Right. Well, I think this is a very, very special circumstance because of the massive amount of CHIPS Act spending that was coming Intel's way. But the president has made it clear all the way back to the campaign that he thinks that in the end, it would be great if the U.S. could start to build up a sovereign wealth fund. And so I'm sure that at some point there'll be more transactions, if not in this industry, in other industries.
Okay, so we should expect the U.S. government to be taking more equity stakes in businesses around the country. That is something that if you're a CEO this morning watching us, you should say, okay, the sovereign wealth fund may be coming and trying to effectively buy in some kind of equity stake.
It's possible, yeah, that's absolutely right. That in the past, the federal government has been giving money away lickety-split to companies, and the taxpayers have received nothing in return. And so now what's happening with the Intel deal is the CHIPS Act money is going out as planned, but instead of it just going out and disappearing into the ether, the U.S. taxpayers are getting a little bit of equity. I can really not see how anyone would think that's a bad thing, unless you thought that the government was then going to go in and run the company. But these are going to be shares that don't have voting rights. The government's going to stay out of it.
Well, it goes back a little bit to the Ronald Reagan quote that I started with, which is when, for many, many years, you and I used to have conversations about Solyndra and how I think you thought that was a terrible, terrible mistake for the U.S. government to be getting involved. And we have been exporting the idea of a free market around the world for as long as I can remember. And this is a major shift. Do you not agree?
No, I think this is a very special case of Biden committed the money. President Trump and Howard Lutnick weren't very clear that they wanted to continue to let the money go out because the paths weren't being crossed, the hurdles weren't being crossed. And so I think it's a very special case. But again, the general principle that if the U.S. government is able to create a situation that benefits everybody, that it should benefit the taxpayers too.
But if you're saying that this is really just the beginning of more as it relates to a sovereign wealth fund or something else, it would be suggestive of something very different. And I wonder how we in the United States and maybe even around the world should think about the idea of national champions, which is something that we've been, and the Republican Party in particular, has been quite critical of for years.
No, I mean, we're absolutely not in the business of picking winners and losers, but this is not a thing that is unprecedented. If you look at it right now, the U.S. government owns most everything of Fannie and Freddie. And the president, led by Bill Pulte and Howard Lutnick and Scott Bessent, are studying what should we do with that equity in Fannie and Freddie right now. They've been bringing in Wall Street leaders to discuss it as well. And so it's not unprecedented for us to have a little bit of equity in something. And again, what President Trump wants to do at all points in time is maximize the value of taxpayer dollars.
Well, let me ask you this then. In terms of improving the future of Intel, one of the things that it needs more than anything else is demand for its chips, which it does not have at the moment. And so there's two ways to get there. One is just make better chips, which they need to do. But the other is they're going to have to find customers. And the question is whether you believe that this administration is going to use its influence with other companies that would otherwise be the buyers of these chips to buy said chips. We had a period of time, remember, where Gina Raimondo in the Biden administration was trying to persuade Amazon and so many other companies to buy these chips unsuccessfully at the time, but criticized, if I remember, by Republicans for doing such a thing. So do you believe that someone from the administration is going to call up any of the tech companies and say, you're building a data center, we'd love for you to use Intel chips?
No, I don't expect that's what's going to happen. I think what is going to happen is with the cash inflow that they've gotten, in addition to some money from outside private funders, Intel's going to get its act together and once again become the leader in chip space.
Can I ask one related question? Because I wonder if you think there's a historical sort of rewrite of history. Some people have suggested that the Biden administration should have taken equity the first time around when the CHIPS Act was first put in place. And the reason I'm curious about that is because I think at the time it was clearly to incentivize chip companies to come to the United States, do business, build fabs, and that fabs at the time were considered uneconomical, meaning companies didn't want to do this unless they could be subsidized. Now, maybe you could argue that given the tariff regime that's been put in place, it's changed the economics of what the playing field looks like today. But at the time, I think it would have been very difficult to go to these companies and say, I'm going to give you cash, you're going to give me equity, because I think they would have said to you, then please don't give me the cash. Am I wrong?
Well, again, if you're a company that's losing money, the equity doesn't have much, if any, value. And the bottom line is that President Trump is building an America First agenda that includes, as you say, tariffs, which will make it so that people are much more incented to bring their production onshore. And so 100%, we expect that companies like Intel that are onshoring production are going to become increasingly profitable because of the president's trade policy.
Kevin, it's Wilfred. I wanted to move the conversation on to the Fed. Did you welcome the tone of the chair's speech on Friday, the pivot, I guess, that started to appear?
Right. Yeah, I think that the pivot was accurate. It was data-driven. You know, if you look at the trailing 6-month inflation rate, it's 1.9%. Core is about 0.5% higher than that. And so inflation has gone way down. Meanwhile, the economy is looking strong, but not too strong. And so I think it's appropriate for the Fed to consider now doing what federal funds futures markets are saying they're going to do, and that's cutting rates. And so I think that the Fed's a little bit late to the game, but I thought that the presentation that Jay Powell made up at Jackson Hole was sound. Maybe there's still time for Jay Powell to have his term extended and you won't be considered as the replacement. Oh, shucks, I don't know. You think it's impossible to get back in the president's good books for Jay Powell? Yes, I do. Yes, I do. And when do you think he'll make up his mind, the president, for the vacancy there? Well, Secretary Bessent is running a thorough search process. There are a number of really excellent candidates being interviewed by him and the president, and I would expect that this would run out for another few months before the president decides.
Kevin, Leslie Picker here. I'm curious kind of where things stand with the Section 232 review, especially in light of the strategy with Intel, with MP Materials. How are you strategically looking at kind of protecting national security crown jewels in this country, given the tariff picture as well as the potential to take stakes in certain companies? Right. Well, you know, we've got 232 investigations and 301 investigations, and then also tariff deals that were cut left and right. You know, we've got the Koreans coming in today to hopefully finalize the deal. The bottom line is that, as you saw earlier in the spring with the rare earths and the magnets, that it's unacceptable if a potential adversary has control, a chokehold on the American economy. And President Trump's team has studied the U.S. economy and studied our trade patterns with foreign countries, and they're identifying things that need to be onshored more for national security reasons. And so that's what's going on with that. Kevin, I'm really interested in a broad point here, and not the specifics, and I know you wouldn't try and comment on how a foreign government should run themselves. But a country like the UK, a deep ally of the US's who's already done the trade deal in large part going forward, should the UK, you know, the big part of the discussion, as you know better than I, with all sorts of different trading partners, has been the topic of non-tariff barriers and different tax structures and things like that that the president wanted to be removed. And then we see a deal like this with Intel, where the government is taking a big stake and helping with investments. State support might be a generous phraseology, but it's not a million miles from that. Should countries like the UK think along the same lines? Should we invest in domestic champions to try and compete, or would that count as a non-tariff barrier that we're not allowed to do? Oh, I don't think it's a non-tariff barrier. If you look at the non-tariff barriers, they're literal barriers, right? They're things that say, for example, if the food is genetically modified, or if we have Roundup on the fields or something, then we're not allowed to ship the agricultural products. And one of the things I think is a great victory of all the trade deals that we've been striking with President Trump's leadership is that we're doing away with those non-tariff barriers, so that we will be able to, after this Korean deal, sell U.S. cars in Korea. We will be able to sell U.S. agricultural products into Europe. We'll sell beef to the UK. And so I think it's a completely different thing. And again, the Intel deal is something that we inherited from the Biden administration, a commitment to give them chips money. And we made a better deal than Biden did. And that's why the U.S. shareholders, or U.S. taxpayers, own about 10% of the company.
Can I ask you a slightly different question about tariffs? And I'm sure you've heard the same thing. If you talk to some of the automobile makers, for example, they will tell you that we are, because of the way the tariffs are set up, and even the costs in the United States of building cars here, that actually we're creating our own silos. So this idea that we're going to be exporting our cars to other countries, we may have the opportunity to do such a thing, but we can't do it in a competitive way relative to the other car makers that are outside of the country, China, obviously, and some others. And so I'm curious how much business you think we ultimately pick up with the quote-unquote opportunity to export versus the opportunity to just raise prices here in the United States?
Oh, I think there's an enormous amount of opportunity to pick up business. And the way to think about it is that we've got countries like Korea and associations like the EU, where they have their own regulations for cars, and unless the car passes exactly those regulations, then we're not allowed to ship the car there. And they could be very, very different from what you're allowed to do if you're going to sell a car here in the U.S. And if you're thinking about selling an American car into Korea, then retooling a whole factory to meet the Korean regulatory standards just doesn't make a lot of sense. And so I think that harmonizing on those regulations has been a key feature of the trade deals that we've been negotiating, and it will absolutely open up markets for U.S. products.
Okay. Kevin, it's great to see you this morning. We appreciate you taking the time on this final week of August. Just as busy for you and I, but hopefully some people are watching us from the beach. Thanks.
Yeah, like Joe.
For their sake.
Next on Squawk Pod, investing in sports. As the U.S. Open gets underway in New York, investor Mark Ein joins us. He is owner of the D.C. Open and a partner of the Washington Commanders football team. And he says there's magic in the tennis business.
It's more than just what's happening on the court. There's great food, there's great shopping, there's great bars, there's venues. It's an experience. And so I think taking that mindset and taking it to other sports is a real opportunity. And you see the best teams doing it.
This is Squawk Pod.
Stand Andrew by in 5 seconds. 4, 3, 2, 1. Up and Andrew. Cue. Here's Mike.
You're watching Squawk Box on CNBC. I'm Andrew Sorkin, along with Leslie Picker and Wilfred Frost, in for Joe and Becky on this last week of August, but a very busy one nonetheless.
Well, the U.S. Open underway here in New York City in a first-round match last night. A big upset in more than one way.
Please, not now. Get off the court, please.
Looks like a photographer had just
First
come onto the court.
Ladies and gentlemen, because of the delay.
Russia's Daniil Medvedev had a temper tantrum, understandably, after a photographer entered the court in the third set. The 2021 champ was facing match point against France's Benjamin Bonzi, who is unranked, when the match went off the rails and was suspended for 7 minutes.
Wow.
Medvedev fought it off, took the match to 5 sets. Bonzi, however, won the 5th set for the upset, but a big delay there. And as we said, a lot of upset tantrums unfolding late last night.
With a lot going on. We got a guy here who knows a lot about tennis. Joining us, someone who knows, he also knows about football, he knows about security, knows about SPACs. We got a lot here. Mark Ein, Castle Executive Chairman, owner of the DC Open and the Washington Commanders partner. One of the early SPAC kings. Can we call you that? Do you like that name? You don't like that name?
I used to like it more.
You used to like it more. We can talk about that in a moment. The Open, though. Should we talk Open first?
Yeah, for sure.
The economics of this Open have gone sort of like parabolic in terms of what's happening. I'm curious, A, what do you think is going to happen this year if you have picks, but just the shift in terms of the economics and therefore what it does to the rest of tennis and even the tournament that you have in D.C.
Yeah, so tennis is having an amazing moment. In the U.S., participation is up 45% in the last 5 years, and it's being driven by young people and diverse participants. So that's great for the sport because it always had this image of sort of an older, not very diverse audience, and that's totally changing. And then the sport itself, these athletes are like global superstars, and you see emerging brands like Lululemon attaching themselves to Francis Tiafoe, and Viore just did a deal with Jack Draper. And actually, Andrew, one of the last times I was on here, we talked about you asked me about Roger Federer leaving Nike.
Yes, I remember we had a long. We were all talking about Nike.
Talking about to go to Uniqlo.
Yes,
that was the deal that got the headlines, and you know,
and the real deal was he got to On.
And he became a billionaire.
Right.
And so that's the thing about tennis. These athletes are global icons. They get the entire world focused on them, and that drives the whole ecosystem. So the best players are making a ton of money. And by the way, it's also men and women. The unique thing about tennis is 4 of the top 10 highest paid tennis players are women. And so it's both men and women. And then it just fuels the whole ecosystem. So tournaments everywhere around the world are doing great. Our tournament's sold out for the last 5 years. You see that everywhere. And it all starts at the top. You get a great event like the U.S. Open, and the whole ecosystem benefits.
I guess you weren't there live last night because you were getting ready to come and join us. And that's one of the things as well. U.S. Open always runs a hell of a lot later than some of the other tournaments like Wimbledon, which is kind of adds to the fun of it all. But today, Venus is back.
She is.
I mean, this is incredible.
Yeah, I mean, I love Venus. We've been friends for a really, really long time. I'll be there tonight supporting her. She decided she wanted to make a comeback. She made it at our tournament a few weeks ago. She beat a young American who's really, really good, Peyton Stearns, who's like 32 in the world. Beat her on our center court. And it got a lot of attention. And then she played in Cincinnati. She's playing tonight. And I think it's a great inspiration for people that even at 45 years old, you can be out there at the U.S. Open playing singles.
Can I just go back to the brands? Because you were talking about Lulu and Vuore and all of these. And what happened to the old brands? Meaning, where is Nike in all of this these days? Are they still making money in this, or they've basically given up on tennis? I mean,
No,
they're on the players, but they've scaled back in terms of what they used to be doing. I would have thought between paddle and all of the other racquetball sports, that this would be like a huge new market for all these guys, and no one's doing it.
Well,
they're not doing it, but there's a lot more competition, I'd say.
So I think what Nike's done is they focused on the very best players. So they have Sinner and Alcaraz, who are the icons.
No, they're the
on
top,
the men's
but that's
side.
it.
They have Sabalenka on the women's side. They have Qinwen Zhang, this Chinese woman who's amazing. And so that's been their focus. But I also think it's other brands have made big investments. I mean, they're paying a lot of money to get these players. And so you see, it's not just that Nike's giving them up. It's other brands have seen the power of tennis and want to get involved.
Okay, go ahead.
Oh, no. I was just going to ask, what was the driving force behind the changing demographics that you talked about? Was it the player stories themselves? Was it the media element of it? The expanded timeline this year for the U.S. Open? What is it that?
It's such a good question. When I bought our event in 2019, and just fun story, I was a ball kid when I was a little boy at the tournament that I now own, and I wanted to make sure it would stay in my city, so I bought it in 2019. And the bear case then was Roger, Rafa, Serena were retiring, tennis is going to fade away. What I believed is this next generation of players, and I knew the Francis of the world, the Ben Sheltons, are amazing. They just never got the attention because all the attention was on the other players. Now you see these young players, they're amazing on social media, they have great personalities, and they're diverse themselves. Francis Ben, all these, Coco Gauff is extraordinary. And so just like in any other sport, they're role models, and they're inspiring these young kids of all types to come out and be part of tennis.
It's interesting that you obviously own a tournament in tennis, you own teams in other sports. Are there similar models there? I mean, what do you learn from one to the other? Obviously, you can't own a tennis player. Maybe you could do a deal of that ilk, but it's a different way of getting a piece of a sport. Yeah,
it's been really interesting being involved in both because there are lessons learned in both. I think the unique thing that we can bring to tennis to other sports is it's not just, if you go to the U.S. Open, it's not just 1 2-hour game. If you do a good job of creating an amazing fan experience, people will come for 6-7 hours and they'll come back and back and back and back. And so if you go to tennis, it's an event. Right? If you talk to your friends
You've only got 2 weeks of the year where you can attract them.
Well, that's the thing, but people love it and they come out every single day and they stay there forever because it's more than just what's happening on the court. There's great food, there's great shopping, there's great bars, there's venues. It's an experience. And so I think taking that mindset and taking it to other sports is a real opportunity. And you see the best teams doing it. Like the best football teams create a curb to stadium experience that starts the minute you get there. You get there early, you tailgate, you stay after the game. I think that's something that we can take in other sports.
Could there be more of a global league, like sort of what Liv done with tennis, where you could own it all year round rather than just the big tournaments?
Tennis already is a global sport and the calendar is really full. I was involved in World Team Tennis. That was actually my start in the sports business. It's just the calendar's gotten very condensed, so it's hard to find windows to do that.
Can I ask you about sports rights generally? Some people would say this is a massive bubble. Right now, everybody just wants to talk about sports. They want to talk about live sports. Yeah. They want to put on, people are buying rights to, drone shows, anything, right? I mean, anything that moves, that's live, people think has sort of a newfound value. And what I can't figure out is there's only so much time in the day, right? Yeah. And between live news, between podcasts now, between sports, does anyone watch a drama or a comedy anymore? I don't know. I mean, honestly, do you think that all of this will be able to keep up?
So I think the biggest and best sporting events and media properties are just continue to go up because we're all trying to find places where the whole audience comes together and in a very fragmented media world, and that's sports. I mean, you look at 2 years ago, of the 100 highest ranked TV shows in America, 94 were NFL games and 3 were college football games. So it's the place that people go. But what's happened is more people want to own sports teams and they become more unaffordable. Then people say, well, I can't own an NFL team. Maybe I'll own a hockey team or a baseball team. Then that becomes higher. And then people go, well, I can buy a drone team or I can buy one of the other things.
Right.
And people want, and so a little bit this is fueled by people wanting to be involved. And also
sure, I'm just wondering whether you think sailing is going to become like a major sport one day or not.
I honestly think it's like any industry. I think some will work and some won't. By the way, CellGP is unbelievable. Like, it's an unbelievable thing. Whether it becomes a big thing is hard to know. Some of these I think will work and some will go away, just like in any industry.
In terms of how it links back with the media, I'm really interested if you think, obviously Apple bought MLS rights globally, to distribute rather than the leagues doing deals in different geographic regions. A lot of talk now, given the success of the F1 movie, will they try and do the same for Formula One, which is obviously quite a global sport? Do you think we'll see more deals like that? Global deals for distribution, even if it's a national league? Yeah,
I think, like in tennis, where my tournament's in 170 countries, but it's more country by country. I think it's just going to depend. Oftentimes you do better going to each country and finding the broadcaster or the streaming partner that wants to pay the most, and you aggregate that. Sometimes there might be someone like a brand like Apple that just wants to own it globally, and that'll be who will win those bids.
NFL is obviously such a US-led sport, so it doesn't necessarily apply to that. But I guess the next step would be, maybe the Premier League soccer or F1 are kind of global enough that should the leagues just deliver it themselves, pay-per-view globally on PremierLeague.com or F1.com, or do you think we never quite get to that?
That's a debate, and you see a lot of leagues in the U.S. have their own channels and start to experiment with their own platforms. What you find is there's a lot of value in being on a platform that has audiences outside of the people that watch your sport, right? So the value of being on an ESPN is that you get the general sports fan. And if you're only broadcasting to your fans, you don't get that engagement with people who are less involved. So I think there's always going to be a place for multi-sport platforms. And I think it's smart for the leagues and the tennis and the different sports to participate in those as well.
Two other things. Castle, you have a pretty interesting perspective on what's happening in office places and the like. It's a security company. What are you actually seeing? We keep talking about, are people really back? Still companies we're all here 5 days a week, but there's a lot of places in the country that are not.
Yeah, so that is the trend. Executives have wanted to get their people back by and large for a really long time. It just took a long time to be able to make that change. But you see, Jamie Dimon was early, David Solomon, AT&T just came out and said, if you want hybrid work, this isn't the company for you. So you're seeing that. What you see in the data is interesting. Our data at Castle, which is kind of the big source, says that 55% is back to 55% of what it used to be. But that's across regions and across days of the week.
55% is just half of what it used to be.
Yeah, a little, but here's the thing. What you'll see is that that's a weekly average. So on Fridays, it's down to 35%. So that brings down the average. And it's also across property types. When you go to Class A+ buildings on the peak days, it's now 95%. So in the best buildings, in the biggest cities, it's basically back to normal. That's the thing that I think that the data shows.
Okay, final question, because I did mention SPACs at the beginning. Yeah. You were one of the originators of this. Really, like the OGs in this world. And then it got sort of a bad name, not your own, but other people who sort of took advantage and went a little too far. It's back now. SPACs are coming back. Chamath has a new SPAC. He's back. Yeah. What do you make of this? And should we be anxious, nervous? Is this a big opportunity? What's your take?
Yeah, we were involved in the early days when there were a lot less of them. And we did it because it was a really great vehicle for us to take stakes in companies that we would then be part of and help and build and grow, that we're still part of today. That was the idea. It obviously got really crowded. And when that happened, like all capital markets, it honestly became a mess. The market's back. It's becoming crowded again. A lot of people want us to go do it again. Right now, I'm really happy with what we're working on, so we're probably not going to do it. I think it's a lot better when there's fewer people in it than when there's a lot. I think you will see deals that get done that work, and you'll see a lot that don't work. Investors on the front end do get protection. They can always get their money back, and that's one of the reasons that it explodes when there's interest because people figure I can always get my money back if it's not going to work out, up until the point that there's a deal. But for the moment, we're really happy with what we're working on.
Okay. Mark, we're going to leave it there. Have fun at the Open in the next 2 weeks. Lots of news for you. Wilf and Leslie, thank you. We're going to be here all week together. Make sure you join us tomorrow.
And that is Squawk Pod for today, this Monday. Thanks for starting your week with us here. Squawk Box is hosted by Joe Kernan, Becky Quick, and Andrew Ross Sorkin. Tune in weekday mornings on CNBC at 6 Eastern, or get the very best from our TV show in a podcast that you can listen to on the go anytime you want. Don't miss any of our newsmaking interviews when you follow Squawk Pod wherever you like to get your podcasts. That's it. Have a great Monday. We'll meet you right back here tomorrow.
We are clear. Thanks, guys.